funds, which include various commodities, indices, currencies, etc. And earlier this year, the SEC allowed the privilege to welcome David Mack of DigitalX to our Tiger Live session. And DigitalX is a ASX listed entity, and we welcome David to discuss around Bitcoin ETFs. David, welcome.
Thanks very much, Greg. Great to be here.
And could you just give a little bit more of a background about yourself as well, so our listeners can know about your pedigree, I suppose?
Yeah, thanks. So DigitalX Limited, we're an ASX listed Australian company focused on the digital asset space. Obviously, we've been listed on the ASX for over 10 years. Our background in digital asset management is it spans over 6 years. So last year we had our wholesale funds, which were offered to obviously wholesale investors, performed really well. We actually had the number one performing, our Bitcoin fund was the number one performing fund ranked by Morningstar for that year, and our actively managed fund was number 3 for that year. And as Greg mentioned, we're one of the issuers of a product called BTXX, which is a spot Bitcoin ETF listed on ASX. And yeah, we're really excited to be, I'm really excited to be present and discussing this with you all.
Thanks, David. And so we explore this Bitcoin ETF and how it was designed to track the price of Bitcoin, and what's the potential for you as an investor to hold this as part of your portfolio. And David will mention a little bit about, you know, balancing your portfolio by having this type of asset in your portfolio. How do they provide a regulated and accessible way for investors to gain exposure to the crypto market? So that's the theme of today. How can you use ETFs as part of your portfolio, and also, you know, the benefits of using one listed on the Australian Stock Exchange, ASX. We also welcome any questions from our audience. So if you've got any questions, please shoot them through, and we'll endeavour to answer them all towards the end. So David, it's over to you to share both your screen and your thoughts, and we welcome the opportunity of learning more about the ETFs that DigitalX have. So thank you for sharing your screen.
Yeah, no worries, Greg. Thanks for that. Just making sure you can see that well.
Yes, thank you.
So, and I'm very sorry to be dull with you all, but there are a few things I need to mention before we start. So today's presentation again is not a sales pitch, so to speak. We're here to discuss mostly factual information. We're not taking into account anyone's personal circumstances, and certainly not soliciting or making any offers for any one particular financial product or service. It's for general information purposes only. So as I mentioned about DigitalX, again, our background is in the digital asset space for, you know, up to 10 years, over 10 years having been listed.
So just David, just to interrupt, can you just put it on full slideshow? So,
oh, I beg your pardon. Yeah,
that's possible. Little button right down the right corner. It says slideshow.
I beg your pardon. Yeah.
Perfect.
Excuse me for that. Yeah, no, sorry.
It's just there we can see the whole thing now. Thank you. Well done. Cheers.
Yeah. So yeah, again, as I mentioned, DigitalX, I mean, the focus for us again is on high quality management of digital assets. So, you know, investing in this space incorporates very nuanced operational risks, I think, which many of you will be aware who are aware of this space. And DigitalX is really a specialist investment manager aiming to kind of serve investors and manage those risks as they are unique. So I think just as a grounding, and I'm very sorry to anyone who already has a lot of context about what Bitcoin is, but I think it's really important to sort of have a firm footing in terms of an understanding of the asset from a qualitative perspective, because again, and we'll discuss this later, it informs some of the decision making from an investment perspective. So what at the molten core of what you're buying when you're buying Bitcoin. Bitcoin is a peer-to-peer electronic cash system, but it enables something very simple, which is a user of Bitcoin to send this digital token from one party to another. And it does this in a unique way, which is without any reliance on the traditional financial market functionaries like clearinghouses and banks and custodians. So, in effect, how this is done, it's through an innovation known as the proof of work consensus mechanism. So I'm not going to discuss what cryptography goes into this. I'm not going to, this isn't a presentation about computer science, but effectively you can imagine the problem. Like, if you have this kind of network verified system, a group of peers which are trying to, together decide on a form of money, that opens up a whole door of a doorway of potential fraudulence. For example, why couldn't you just arbitrarily double spend Bitcoin? Why couldn't you arbitrarily mine it? These are the problems that you face when you're trying to create a decentralized currency. And effectively, that's what proof of work and these consensus protocols are solving, the double spending problem, quote unquote. So this way we can have a purely network-driven form of currency, if you will. In terms of like why this matters, like aside from Bitcoin's performance, effectively, like what you need to understand is that that qualitative aspect which I'm mentioning is what sets Bitcoin apart in terms of the unique aspects of a diversifying, performing asset. So in today's presentation, we sort of want to go through what are the reasons for that. Why is Bitcoin qualitatively different? Again, so it's technologically different from other assets, but the way to view it is in a sense as a kind of non-sovereign currency. So I think a common trope and a mistake which certain investment professionals often make is that they lump Bitcoin into categories which are irrelevant, such as growth equities and other risk assets. But the issue with that is that Bitcoin isn't a growth equity and it's not gold. Okay, it's different. It's its own thing. So Bitcoin doesn't have a board of directors and a management staff which are accountable to maximizing the free cash flows of the Bitcoin Corporation. Okay, it doesn't have physical characteristics as gold has. It's a purely digital form of money, and its value again is inherent in the qualitative characteristics of it. So I know that in Australia, we have a very stable currency market. We have currency which is not subject to significant intraday volatility. It's being inflated away all the time, but that's a separate issue entirely. In other nations, we know that who do have this very significant intraday volatility, we know that digital assets and in certain cases black currency markets for foreign dollars are being used just so that people can circumvent this significant inflation. You can imagine a fruit vendor who's selling his produce at the local marketplace might have to double or triple or halve the prices within the period of one day due to these extremely hyperinflated and intraday volatile home currencies. And so we don't have an immediate lived experience as Australian investors, but I can assure you that problem is very much a real one. So that's just to make a tangible example of where Bitcoin is being used globally. And in terms of what that means, like this qualitative difference, this idiosyncratic nature of Bitcoin could be said to drive sort of different risk return characteristics. And in terms of the performance, this manifests in potentially slightly unexpected ways. Bitcoin has responded very positively to global geopolitical shocks, I think, as we're all aware. So certainly in February 22 and October of last year, Bitcoin had very strong performance in and around those periods, which is surprising given that the common rhetoric is that it's an unstable or speculative asset. Well, it actually performed in a much similar way to a traditional flight to quality or a flight to safety asset would. like a US dollar yen pair, or or gold or silver or something like that. So that was unexpected, although I think it frames the way that the marketplace has accepted this asset. And in a sense, Bitcoin's long-term adoption, and I don't want to be too contrarian here, but it could in a sense be driven by this sort of global bet on economic weakness, this sort of growing sense that inflation isn't being controlled, this sense that fiscal and monetary policy is in untested areas given the rate of issuance over and the rate of growth of the money supply in recent years. That can be said to be a driver of the adoption of Bitcoin. I think it's often referred to as a hedge against inflation. That might be potentially the wrong way, the wrong sort of language to use. You could view Bitcoin as a savings asset. If you think about what you want your savings to how you want your savings assets to perform, you want them to preserve purchasing power parity over multiple years, and that's a really good way of looking at Bitcoin as something which can potentially deliver that over the long term. Now, we have put together some analysis again from an asset allocation perspective, just putting this into a tangible scenario for potentially you all. And this is something which we present to the financial advisors and portfolio managers, which we also work with. The comments in terms of what the way that you should approach an investment in Bitcoin, the way that you could consider this asset within an already diversified portfolio. So what we've done is we've analyzed a fairly conventional equities and bond fixed income portfolio from the indices which are listed on screen, and we've tested the waters from conservative to aggressive and experimented with what a 1 to 2% allocation to Bitcoin did to the cumulative return and the risk-adjusted return. So we look back over a 5-year period. We think that's a pretty comprehensive view of Bitcoin, and it's certainly a long enough period to get an understanding of what the effect would be. And the basic findings of the analysis are as follows. So our analysis indicated outperformance. So adding Bitcoin in a small allocation accrued a greater cumulative portfolio return. And the second thing, which is potentially surprising, we'll get into it, is that it also had a low incremental risk and it had a strong risk-adjusted return characteristic as well. So, obviously the maximum that you can lose when you, underweight an asset is the amount that you allocate to it. So 1 to 2% allocation means that that's the most that you can lose. And of course, again, the qualitative aspect, as we've discussed, is, in my opinion, a driver of that performance. So this is the cumulative return results. So if we look at the emboldened blue high-performing line, that's the Bitcoin enhanced portfolio, and the benchmark is below. You can kind of see in the fullness of time, as we get some of that variance drag, the performance really starts to become slightly more dramatic. Again, the return is compounded over years, and I think that is important to reflect on, because it's sort of this, I think, very clearly demonstrates an appropriate mindset in a sense for an investor approaching this asset class, that it's not necessarily a short-term opportunity. I think in the data it's quite clear that the returns are accrued over a longer period, over a longer investment horizon. That's because Bitcoin's characteristics in terms of the way that it performs. And the Sharpe ratio, again, this is the risk-adjusted return. So we're considering the volatility of Bitcoin along with the return here. And we can see again that the Bitcoin enhanced portfolio is a more favorable option from this perspective. The risk return, they're similar, but in effect, Bitcoin is outperforming on this basis as well, which is important to consider, because I think what we're commonly told, or what a common story that I hear is that, well, Bitcoin is very volatile, and therefore it is risky, and that you should sort of either dismiss it or ignore it. But again, there's context, because if we think about it over a longer period, it's actually lowering volatility within an already diversified portfolio. and we can look at the asset itself as having intraday volatility. But again, depending on your perspective, that might be completely irrelevant. So I think that's interesting. That's certainly interesting to consider as an investor, just again, what your time horizons are. So as Greg mentioned, to begin with, the options for the Australian consumer are really developing, and I think it's a really positive thing that we have high quality ETFs which are simplifying the exposure to Bitcoin. I think the significance of this is and I'll just discuss briefly like what the kind of purpose of an ETF and why I think they make sense. If you want to buy Bitcoin yourself, you're faced with a couple of options. The first option is you need to go to some kind of OTC vendor to purchase the Bitcoin. They're commonly referred to as centralized exchanges. So that might be whichever exchange domestically. One issue with holding your assets, in other words, leaving your Bitcoin with the exchange provider, which you've just bought it on, is that there are a couple of famous examples of where that's gone wrong. Principally FTX, when they defaulted on their consumers' deposits and were held to very low standards of operational due diligence, resulting in a large catastrophe. That's probably an outcome that you want to avoid. The second option that you have, if you want to be very secure, is that you can physically secure your own Bitcoin. So effectively, if you own the private key, which is paired with a public key, which is effectively a Bitcoin wallet, you control that Bitcoin as though it were physical. You control the ability to send Bitcoin. That's tantamount to owning it physically. So you can physically secure a private key yourself if you want to. There are devices which can help with that. You can bury it under a kilometer of Swiss rock if you want. You can go to a bank vault. You can do whatever you want, but you can store a physical device with private keys on it. And a final option is to invest with a Bitcoin ETF, which I think the basic structure of these products is that they work with, and DigitalX is included in this, work with service providers who have a very professional and organized, insured approach to this, because investing is, for some people, a frightening proposition to begin with, but especially when you add the fact that you have to have your own operational security apparatus to secure the assets which you're buying, that can be potentially increasingly intimidating. So what ETFs do is they abstract you from that process. You buy an asset on an exchange and you can have assurances, which we'll discuss, about the security of those assets. So in terms of the local advantages, though, which is what this slide is about, the advantages of a local ETF is that you don't, for one, have to trade out of hours with a foreign exchange. So if you imagine at the moment which you want to buy Bitcoin, and the NASDAQ isn't trading, you don't have a complete knowledge of what your fill price would be. You can always place limit orders, I understand that, but given the intraday volatility of Bitcoin, you can be potentially worse off for not having a clear insight as to what the execution price will be. So in a sense, like having an ASX listed product can provide greater confidence, greater transparency, because you can see it quoting live during normal business hours. Yeah. CHESS settlement is another potential benefit, depending on your perspective, again, and depending on which broker or vendor you're working with. There can be foreign exchange, which is involved in trading with international products. There can be certainly tax considerations for you to consider. So CHESS settlement is probably a more simple approach. And I think that a more obvious one is the domestic regulatory standards, which already exist to accommodate this product. So again, one thing I kind of want to address is that what we often hear about Bitcoin is that it is somehow shattering these sort of standards of legislation and incorporating, but I think it's a bit of the wrong way of looking at it. Our product is regulated as any other ETF. We comply with Australian legislation as any other ETF would, and we have a unique underlying asset, but we comply with the same standards as any other issuer. So I think that there's a level of confidence that can potentially come for the investor in light of that fact. They have the same comforts of that they're used to in terms of the Australian regime. I won't spend too long.
So I think that's one of the key things, if I can just interrupt, is that these ETFs, they've only been available this year, but in terms of certainty of holding your asset and all that sort of thing, for a person like me, the ETF makes complete sense. Whereas trying to buy the ETF, try to buy the actual Bitcoin and storing it and that sort of thing, I wouldn't understand or know how to do that. But I'm used to trading equities, and so this is another equity type product, an exchange traded fund that makes it easy to do and adds to liquidity and all those things. So I think that's the key of this part. Yeah.
Yeah. No, thanks, Greg. I think that's right. It's appearing as any other asset, which potentially some of the audience are used to trading. So again, in terms of what this is, just some information about DigitalX's Bitcoin ETF. BTXX is the ASX ticker. I don't want to spend too long here because, again, all of this information I would encourage you to find on our website. It goes through the service providers who we work with. I think there are some important mentions to make, though. Coinbase Custody, which is the I would argue is probably the most globally reputable service provider. They have very high standards for the way that the Bitcoin is physically secured in our fund. We're happy to be working with them. And again, K2 Asset Management, our issuer, is a very experienced, responsible entity, and again has covered other asset classes, not merely crypto. And I think that's a good opportunity, Greg, to jump into questions as they've occurred to the audience. I'm happy to sort of backtrack, to some of the more qualitative Bitcoin related questions, or answer anything which may have occurred to the audience.
Okay. So in terms of some of my own ones, so the underlying, what's the underlying asset?
It's Bitcoin, spot Bitcoin.
Okay, cool. And how's that hedged in currency terms? So it's traded globally in US dollars, and your Bitcoin product is in Australian dollars. So how do you hedge the currency risk or not hedge the currency risk?
Yeah, so
that's one of our questions from our audience. Yeah.
Right. So the fund works with a market maker who manages the execution and foreign exchange risk. That is an internal process which they manage themselves. As the asset manager, our role is slightly different from that, in the sense that we're involved in working with the prime broker and sending instructions to have the Bitcoin stored at the custodian. So the DigitalX Limited is not in-housing foreign exchange trading. That's something which is serviced by the market maker.
Okay, cool. And in terms of so custody, we mentioned a little bit. So custody is where?
Coinbase Custody, which is a US qualified custodian.
So the same as Coinbase, the stock?
Yeah. So I mean, there is a slight difference in the sense that there are very specific provisions about bankruptcy remoteness, for example, which entity the actual fund contracts with. But yes, it's the Coinbase, which you're familiar with, who is the responsible for it. So a qualified custodian for US purposes is I think similar in conceptually to, and I could be wrong on this, but similar in conceptually to what an authorized deposit taking institution is in Australia. So they're held to, they're regulated as a New York State trust. In terms of maybe discussing what assurances they make over this physical security of the Bitcoin, again, it's something which they have to be very focused on. So they've completed SOC 1 Type 2 and SOC 2 Type 2 audits about their physical security apparatus. And again, all of the details about that there's an exhaustive list which you can find in the PDS, which I'm happy to provide after this. But it's a in terms of the a concept which is important to understand. Hold storage is a term which some of the audience might be familiar with, which in effect means that what Coinbase do is the private key, which I referred to before, which is this string of is effectively a string of data which allows you to sign transactions sending Bitcoin. What Coinbase do is they shard that. They shard it and store the private key in different locations, which again, they have physical operations and processes involved in how they secure those locations. And they're all military grade and audited by external service providers. But cold storage in effect means that the physical locations in which they're stored are divorced from a web connection, and they're just completely not remotely accessible. And that's crucial because that's a key cybersecurity vector, I suppose.
So in terms of the process as the manager of this, so say I'm buying an ETF, and so say you get big orders or big flow of funds into your ETF today. How do you manage the process of actually buying the Bitcoin itself, at a within a reasonable time to be able to cover the risk of the ETF itself? Because you're buying the actual physical, if you like. You're not buying a futures contract or anything else. So how do you manage that process on I put in an order, it gets filled. What happens at your end?
Well, there are a set of processes which are involved, which again, part of those are again handled by the market maker, which is handling all of the quoting on the ASX and all of the necessary foreign exchange risk management. In effect, we receive what's called a creation order, which is the market maker telling DigitalX Limited, this is the amount of creation units which were requested in X period of trading, and this is the we then go about our own processes, which are oriented towards best execution for the investor to satisfy that order, and we receive an instruction from the market maker in terms of how to go about that. So again, it's very much market maker led, and I think I couldn't comment on all of the different products, but I think that's relatively consistent Australia wide.
Yeah. Okay. Cool. And in terms of liquidity, so buying and selling is pretty easy to do.
So again, it's exchange liquidity. So it's that which is available again on the ASX, and the fund is available on the ordinary brokerage platforms, Tiger Brokers included. And again, there are standards which you need to meet related to an ASX listing, which means that liquidity is a key consideration among those. So yes, the fund is liquid and available during ASX trading hours.
Okay, so just in terms of the details, if people want to load it onto their Tiger Trade watch list, the ticker code is BTXX. Bravo Tango X-ray X-ray is the code. So that product today is up around 3% odd. So it obviously moves around quite a bit, and the volatility has been quite high in Bitcoin, and there seems to be a big outflow out of gold ETFs over the last 24 hours, particularly. I think there's $800 million of ETF outflow out of gold, perhaps into Bitcoin type ETFs or other types of assets. So interesting plays in the market at the moment. So what's your well, you can't make a recommendation, but in terms of you've talked about having this as a long-term investment, and so one of the adages in the market has always been, better to have time in the market than try and time the market. So having it as a, if you have this in a long-term portfolio, then it helps the portfolio return, etc., as you've well pointed out. So in terms of volatility, is that volatility too much for individuals, or or not?
Well, that would depend on the individual, Greg.
What's that?
That would depend on which individual you're talking with. I think, I think it's a challenging one. It's interesting that the flows into these products tends to really spike around all-time highs. I think it's a question which I couldn't answer for an individual, but again, what I've tried to offer in today's presentation, again, as you sort of mentioned, is that it's more important that you understand what it is that you're investing in, and sort of the molten core of your own thesis. And with Bitcoin, admittedly, it is a slightly odd and contrarian thesis. The concept that there could be a source of value derived from a non-state issued currency, I think is a hard, conceptually at least, or certainly it's a contrarian idea. And in many respects, Bitcoin has emerged from a monetary experiment or a sort of technological experiment gone wildly successful. And certainly if you think of different alternative digital assets, cryptocurrencies, like Ethereum, for example, the bet with Ethereum is in effect that people want to build not only censorship-resistant currencies, but censorship-resistant applications, software applications, which are hosted on a computing platform, which is hosted in a similar way to Bitcoin. So I think that it's important that you understand that, and sort of you can get around as an individual, get around the sort of common rhetoric. I think there's a lot of noise about the performance of Bitcoin without a huge qualitative focus. What is it? It's an electronic cash system. Why does that matter? Well, it's unique in the sense that of the way it operates. It's unique in the way that it's facilitated. And that is the starting point for evaluating this. And it informs certain, I think, decisions for people about what the appropriate investment horizon is. Because, if you think about a bond with fixed maturity, the characteristics of that asset determine the appropriate holding period. If you consider an out-of-date call option, again, the characteristics of the asset inform an appropriate investment horizon. So again, that's not advice. I think it's just sort of common sense for people to understand. You don't need to fully you don't need to be able to write code, but I would spend some time reading the Bitcoin white paper, understanding what is technologically being offered, and start from there, because that's a really good, if nothing else, you'll come away slightly wiser, understanding a novel contribution to computer science which has been made in the last 20 years.
Okay, cool. Yeah, thanks, David. So in terms of what David's been talking about, this asset class is available through an ETF based in Australia. That overall, if you're a long-term investor, we would encourage you to put 1 or 2% into this type of asset. And if you do that, then the returns should outdo the returns of not having that type of asset. So by having a diversified portfolio, it's not only diversified amongst bonds, equities, cash, property, etc., but it can also include other types of commodity type products and also Bitcoin products. And I think that's important for all investors to think about. So traders will buy and sell, fairly quickly on trying to gain short-term returns, but long-term investors should definitely think about this type of asset as part of their portfolio. And as David said, try and learn a little bit more about what you're actually buying, either before you do it or as you do it. And we'd encourage people to have a look at, particularly this ETF based at DigitalX, listed on ASX, code BTXX. So, David, it's been a great pleasure having you on Tiger Live, and we thank you very much for your time and your explanation of this type of product, which I have learned a lot. And I think every day you wake up, if you can learn something really interesting, that makes your day. So very pleased to have you here, and good luck with the product, and good luck with the business as well.
Thanks very much, Greg. And the last thing I will say is, for anyone with an interest in the analysis which we presented, or if you have questions about that, we can provide the full analysis on request as well. But thanks very much, Greg, and it's a thrill to be with you.
Thank you very much. All the best. Thank you.